What is up, you guys? Welcome back to my channel. In today's video, I'm going to be going over how to invest your first $1,000 or whatever amount of money it is that you want to invest and how to start to do that. A little bit of investing for beginners, a little bit of my take of what is important when you are starting to first invest. So you guys, without further ado, let's just get into this video. New here, what is going on? My name is Nikki and it would mean the absolute world to me if you would consider subscribing by hitting the NB in the bottom corner or the red subscribe button. Join the crew, join the journey. I post 2 times a week on this channel, ranging from finance, business, sexuality, faith, my life. I think that everyone's life is a journey and everyone's journey is worth sharing, so I just document my steps along the way. So if you're into that, or if you're just into hanging out with me half as much as I love hanging out with all y'all, please consider subscribing. And you guys, without further ado, in today's video, we're gonna go over some really, I don't really know, I think to be very helpful if you're a little overwhelmed with the stock market and you're not really sure where to start. I think today is going to be a great video for you, so make sure you stay all the way till the end because I am going to give away not give away, I can't do that, but I'm going to tell you about a stock that I have my eye on. It is a stock that I probably should have initially invested in when I first started, but you know, you live and you learn. So you guys, let's actually just get into it. All right, everybody, so the first thing that you want to do when you start thinking about investing, or you have that capital that you are ready to invest, is to find a brokerage. It's basically a company that you're going to do all of your trades and transfers and investments through. There's a ton, but there's 5 I want to kind of bring up. So the first one is called M1 Finance. Now, I have a Roth IRA set up and that's really all I have on there. To be honest with you, I'm not a huge fan of the M1 Finance platform, but they do have some cool things. For example, they use like pies, so certain percentages of pies for your stock, and you can kind of like get template pies, and it's all very just kind of like percentage. It's very it's a little bit complicated. It's not that bad, but it's definitely not my favorite, but it is a pretty good beginner platform. It just takes a little bit of education, which I honestly have not done. I haven't tried to do that because the brokers that I use I absolutely love, but it is pretty cool to see your pie and what percentage of what companies make up your pie. So that is really cool. I'd look into M1 Finance. The second one that I want to talk about is TD Ameritrade. Now, I have an account at TD Ameritrade. I have basically an account set up for trading. I very recently just kind of got interested in trading, like swing trading, day trading, options trading, because we're in quarantine, so I have some time. I thought, why not learn a little bit about it? So I opened an account. I put 600 bucks in the account. If I get up early enough in the morning, I might make a day trade, try to make a little bit of money. I haven't been educated enough, but the TD Ameritrade platform for me specifically, I just use for trading, and the specific little tool that they give you for that is a thing called Thinkorswim. Super cool. I'm not gonna go into great detail about it. You can look it up yourself. It gives you like the charts, you can have the news, you can have the biggest movers on the side, all the news articles, you can have actual live TV playing as you're making trades, you can have different charts set up, you can have as many windows open as you want. There's a lot of cool things about that platform and there's a lot to dive into. They have their own education center, but like I said, that's more trading specific. That's not my thing. It was just something I started to try to dabble in while I had some extra time, but that's not to say they don't have a regular platform for you to just invest like long-term style. So check that out if you're interested in that. The third one that I want to touch base on is Webull. Now, I don't personally use Webull. I opened an account, but to be honest, I just didn't really like it. But I know a lot of people, especially on YouTube and stuff, really enjoy it. So I don't have too much information to give you about Webull. If that's something you want to look into and kind of weigh your options, I would add that to your list. Number 4 on my list is Charles Schwab. Say that 10. Charles Schwab. That wasn't that bad. But I have to be honest, like, I don't even know how months ago, maybe like a year or 2 ago, my grandparents gave me a little bit of money because they really wanted to have me start investing, and I knew absolutely nothing, and all I knew was that they said to set up a Charles Schwab account. So I did, but it was like so confusing to me. And okay, so I mean, now that I like kind of, I'm not a professional, but I kind of know what I'm doing, it's probably not that bad, but there is so much information, and the security to like have an account, like Like, you have to come up with like 6 passwords, and like I talked to some dude on the phone and had to come up with some verbal password that let me like surpass the other passwords, and like I don't even know. It was a little confusing, a little old school, but I would recommend it because of the security. So if you are at a place in your life, which if you're watching this video you probably aren't, but have a big lump sum of capital that you're trying to invest into a portfolio, I would lean towards something like a Charles Schwab because it is so secure and legit. But if you're just starting off, honestly, I feel as though I would skip Charles Schwab. You can add to your list, look at it so you have options, educate yourself. So the 5th and final one that I'm going to touch on is my bread and butter. It's the one that I use all the time. It is the most simple interface, the most simple way I feel like to invest in the stock market, and that is Robinhood. Now, Robinhood has its ups and downs. I really do love Robinhood. I know a lot of people hate it, but mostly just because of how simple it is. Let me know down below if you want to have like a Robinhood use tutorial, if you think that would help you. If you're interested in Robinhood, there is a link down in the description box. You can download it. You'll get a free stock. I get a free stock, but most importantly, you would get a free stock so you can kind of see how it works, how it's laid out, stuff like that. You really can't go wrong with any one of the 5 brokerage accounts that I gave you right there. If you want some other ones, I know there's other ones out there. Just do your research. Like with everything that I talk about relating to stocks, I'm not a professional advisor or investor by any means, so always please do your due diligence of researching. One thing you really want to make sure is that they are all SIPC insured. Now, you might have heard of FDIC, but that's related to a bank. So like a Wells Fargo savings account is FDIC, but when you're talking about brokerages and assets, it's SIPC, which is basically just an insurance that I believe it's up to $500,000, that if, like, let's say Robinhood, because it's new and it's crashed before and people are concerned, it will give you basically back your money up to a certain X amount of dollars, which I believe is $500,000. I could be wrong, don't quote me, but the whole gist of it is that it's very important to find a place that is SIPC insured. Okay, keep your money safe. The next thing that you want to think about when you're beginning to invest is kind of your strategy. What kind of investor do you want to be? Now, for me personally, I classify myself as a dividend investor, which means essentially I put my money into companies that pay me a certain percent of their net income to hold stake in their shares. I'll get into that a little bit later, but you need to figure out what kind of investor you want to be. So there's long-term, short-term dividend investing, which, like I kind of touched on, you get a certain percent for holding shares of that company. There's growth investing, which is you're basically just focused on like the Amazons, the Teslas, the ones that you can buy at a very good price and you know it's gonna shoot up and you're gonna get a ton of return, but they're not necessarily paying you monthly, quarterly, yearly to have shares. And then there's also things like a trader, like a day trader, a swing trader, an option trader, which I'm really not going into because I mean that's not really the gist of this. I'm a long-term kind of dividend growth investor. I like to mix both dividend and growth, which you can do. You kind of just have to figure out where you fall. And there's pros and cons to both. Companies that pay dividends do not always guarantee that you will get that dividend payment. They can cut it if they're in trouble. And to be honest, we are seeing that a lot now with the COVID-19 situation. Like, companies are having a very hard time, and a lot of companies that have been paying dividends for years cut it. It's not guaranteed money for you, but hey, you know, it has a good track record for the most part. My biggest piece of advice: start out investing in companies that you yourself use. If you love to go to Starbucks and you have Starbucks once a week, which I definitely don't recommend because if you're investing your money, you should be a little bit more frugal than that. But say you love Starbucks, I would invest in that. You love eating McDonald's, you're obsessed with McDonald's McNugget, you might want to buy some McDonald's because you're a consumer. Because if you believe in them enough to use them in your household or have them be a part of your life, then you might as well have a little bit of ownership. So there's a little tip for y'all. The big thing that you want to look at when you're looking at a dividend company, I mean, there's kind of a lot of things, but to keep it simple, you're gonna want to look at the payout ratio. So what that is, kind of mentioned it before, but it's a percent of the net income of the company that they give out to their shareholders. Like I said, either monthly, quarterly, annually, it kind of depends. Every company is different. I would recommend looking looking at that payout ratio. Now, when looking at that payout ratio, you definitely want to make sure it's 60% or less, because the higher it is, that means basically all the money they're making, they're using to pay the shareholders, which is not very good, because if they hit a little bump in the road, they're gonna have to take that down. They might have to cut it because they can't be giving away all of the money that they make. So if you're still here with me in this video, put down in the comments below if you are team dividend or team growth, or team dividend growth, because you can't have both. All right, so the third thing that I will kind of want to touch base on and like put a little seed in your brain is the fact that you guys need to start to be able to research and, you know, dive into these companies with news articles, financial statements, like whatever, but you need to have the education behind you in order to make good decisions with what companies after, you know, like ones that you consume in. Once you get a little bit more serious, you're gonna need to do some research and really make sure the company is worth putting your money into. There are a few websites that I'm going to mention. These are my top 4 favorites. One of them is actually something you have to pay for, so I don't really recommend that right off the bat. I think you can do like a trial run or something like that, but the first one I want to mention is Seeking Alpha. So this one's a great one. It's pretty simple. You can see a whole bunch of data on a company. You just type in their ticker symbol. You can pull everything up. There's news articles, data. It's just a really good kind of beginner site to get familiar with companies and just what terms are, like to see what terms are related to what kind of numbers and data that they give you. So I really love Seeking Alpha. So the second one that I highly recommend that has a lot of kind of information and can like come off as very kind of like confusing or whatever just because of the amount of info on there, but it's FinViz. So that's really cool because that's going to give you kind of like an S&P 500 heat map. You can kind of see what the companies are doing on a big scale map. It gives you awesome stock research with stock screening. So for example, you can put in kind of like your requirements or what you're looking for. So like say you want a 3.5% dividend yield with a payout ratio of 45%, and then it can show you a list of companies that fall under that category, and then you can kind of go within each one of those companies and investigate a little bit further, but it helps you kind of get a whole like, where do I start? Kind of like to, okay, this is my base criteria and let's see what's in there to look at. So the third one's actually my absolute favorite. I think it's the most simple, kind of like modern, sleek, chic looking website, and that's just NASDAQ.com. I love using that. Almost everything that I do and all the research I do is through that, but I do like to incorporate these other places because the more data, the more educated I become, that I can make my own decisions. NASDAQ.com, simple, not too much to talk about. They have, you know, you put in the ticker symbol, the whole company comes up, the data, you dividend, payout ratios, the PE ratios, all of the financials like income, balance, cash flow. You can see the dividend history, like everything is right there available to you. News, articles, all that stuff. Highly recommend NASDAQ, bookmark it. So the last one I'm going to talk about is it is one that I pay for. I think I paid yearly. I got some deal for like 80 bucks or 50 bucks for the year or something like that. I don't know. But it's called Simply Wall Street. Like I said, I think there's a free trial you can do. Just look it up. There's an app on the App Store. So I will pop it up on the screen here for you, but this is kind of what Simply Wall Street looks like. If you go down here and hit the stocks, you can see that you can look at any industry, you can search things. Obviously I'm in the United States market, and then it gives you all of, I mean honestly it's a ton of information. Let's just for example look at Microsoft. So right off the bat they have this like diagram and chart that shows you kind of which way it's getting pulled: past, health, dividend, value, and future. So as you can see Microsoft right there, it looks like it's past, health, dividend, a little bit of future. So you click on that and then it just gives you like so much information, like the PE ratios, earnings, where they grow. It gives you risk analysis. It gives you that chart again. It gives you similar companies. It gives you where it's at today. I mean, you could spend a very, very long time on here just looking at what there is. Valuations, overvalued, undervalued, price to earnings ratio, the growth, like just future growth, chart. I'm not gonna go into crazy because there, look at this. I mean, there's so much data you can look into, like, but I really love, if we go back here, that you can go ahead and look at it by the industry, because when you're first starting off, I mean, you only have so much money to put in there, but it's very important as you continue to grow your portfolio to be very diversified in the different sectors. So I love this because you can really look at, like, you know, energy. I wouldn't recommend that right now, but like energy companies, okay? You can go back, you can look at healthcare companies. You can get all of this information. You can go to Discover. They give you like articles, things to read to further your knowledge. Kind of like with FinViz, you can pull it yourself. So like you want a lot of future, you want a lot of health. So you want things that look like that, you see right there, you can save it. Has 97 companies and it tells you kind of which ones look like that. So that is Simply Wall Street. I really love it. It's just like I said, it can be a little bit overwhelming. I don't know if I'd start off with that. I'd start off with the other websites to really kind of get a base knowledge of what is going on, and then maybe invest some money into that so you can have a little bit more data at your fingertips. All right, moving along. So I know that I had mentioned I would recommend starting off putting money into companies that you are a consumer of, and I really do stand by that. But I really want you guys to think about putting your first chunk of money into what are called ETFs. Now, most ETFs trade under $100, so it's pretty easy to kind of establish a position in them. My favorites right now, there are more I want to add, but right now I really like SPYD, SPYG, and SPYV. So SPYD is dividend focus and a little bit of growth, but mostly dividend. So they have a high % dividend yield, which means you're gonna make more money. I like SPYG, that's a growth. The G stands for growth, so it's more focused. It does pay dividends like 1.9 or something like that, but its focus is on growth stocks. And then SPYV, which is value, kind of a mix of the two. ETFs are basically, what's the most easy way to like say this? A stock. So you buy one share of an ETF stock, and in that share, you are diversified through a plethora of companies. For example, let's talk about one of my favorites, SPYG. I'm actually gonna pull it up for you guys. This is SPYG on my Robinhood app. It's trading right now for $42.11. You can see I have 7 shares and an average cost of $39.23. You can see all your data, my returns for the day. We can see it pays a 1.43% dividend yield. Okay, so that's what that looks like on Robinhood. When you buy one share of SPYG, you are diversified into companies like Amazon, Google, Microsoft, Visa, Apple, and a lot of others. You are then essentially shareholders and owners of all of those companies that make up this ETF. Being a part of a ton of different companies, it's going to diversify you through a ton of sectors within the market. So you're gonna have consumer discretionary, industrials, materials, healthcare. You are diversified. So when starting off, ETFs are really awesome because there's such a low risk to them. Really for 2 reasons. The first one is the one I just talked about the diversification. The second thing that makes it super low risk and great for beginners, and just great for anyone who really wants solid returns and not has to really worry about anything, kind of like a set it and forget about it investment strategy that's really just going to be beneficial to you, is that if a company falls out of the criteria, so if it's not one of those top 500 companies that the whole ETF follows, it falls out of that criteria, what happens is they will replace it with a company that does, all without you knowing. They're just going to take care of it for you. So with that just automatically happening, you don't really have to stress about research and data and taking the time it really takes to, you know, educate yourself on certain companies, because it's just an automatic process. Kind of like I mentioned, SPYG has that 1.43% dividend yield. So essentially what that means is for every $100 that you put into this, you are going to get $1.43 paid annually, and they pay out quarterly, so you divide that by 4, and that's how much you are going to get paid per quarter for just holding shares in this ETF. So you're gonna make money with the dividend. You're gonna make money with the growth of the company and the increased value of the company through the stock price. And that alone, mixed with all the other things I just talked about, make ETFs really, really awesome for beginners and, just like I said, people who kind of want to set it, forget about it, and make a really, really good investment. ETFs have expense ratios, okay? They have expenses. So for example, SPYG, I believe, is a 0.03%. So it's like a fee. It's a management fee that you pay basically to the ETF. I'm not going to go into huge detail about that. When you're just starting and you're just getting things popping off, I really wouldn't worry about the management fee so much. Don't stress yourself out about like another thing to learn. Just know that that is there. So since you made it this far in the video, I'm going to go ahead and let you know of an ETF that I am going to be buying here very soon, and that is VTI. It is the Vanguard Total Stock Market ETF. It is currently trading at 148.60. It has a 1.91% dividend. It's pretty much like, it's a great ETF. Let me just put it that way without getting into crazy detail about what's going on within the ETF. It's a very good ETF. It's diversified with large cap, small cap, mid cap, very diversified within its companies. It's so diversified, it actually contains over 3,500 different stocks and companies. Some stocks like J&J, Procter & Gamble, Facebook, and Berkshire Hathaway. And yes, it is a little bit more on the expensive side, but that is such a solid ETF. It does very well with its annual returns. Get that dividend, it's basically 2%, which is really awesome. So you guys, if you made it this far into the video, put down in the comments below what stock you currently have your eye on. And you guys, please, if you made it this far and you found some value in it, please smash that thumbs up button. It helps the YouTube algorithm push my content out to other people. It means the absolute world to me, and I would just really appreciate that, y'all. And if you've made it to the end of the video, you are the real MVP. Come here, you know I love you. And you guys, like I say at the end of every single one of my videos, enjoy the journey, whatever your journey is, and always remember to do what sets your hearts on fire. And I will catch y'all in my next video. Bye, guys.